Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Consumer Sector Growth in Malaysia, Analyzing Trends Ahead and Investment Potential. So my name is Shen Chu. I'm the moderator for this session. Now, consumer sector in Malaysia is undergoing a dynamic changes caused by and shaped by evolving consumer behavior, economic trends, and also shifting demographics. Now, risks like inflation and boycott could still linger. So, how do we identify the right investment opportunity within this rapidly changing landscape? So today we have invited the founder of One T Invest, Mr. Max Tan, to share his insights on what are the key drivers that could shape the future of consumer sector in Malaysia and how do we identify the investment opportunities in this evolving landscape. Now, before we begin, as usual, disclaimer. Whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He first indulged himself in the SME financing industry right after finishing his diploma in finance and investment in TAR University College. So he continues to pursue his interest in the finance and capital market by joining Rakuten Trade and TA Securities, which he held the position of risk and compliance officer and dealer's representative. And to date, he has over 8 years of experience in the capital market as an investor himself, where he also runs One to Invest, a financial blog which amassed over 60,000 followers to date. He was also an associate director at a private equity firm and is now a senior partner for corporate advisory firm. So he's also a SGX Academy speaker. So he's none other than Mr. Max Tan. So Max, good evening. How are you today?
Good evening, Shane, and good evening, everyone. I'm doing well, physically as well. Portfolio, not so much.
All right, I think the whole world also suffered a meltdown in the stock market. So I
Yeah.
guess many retail investor portfolio also took a hit, huh? So now we are going to learn from you how are we going to navigate the changing landscape in the consumer sector. So over to you, Max.
Thank you so much, Shane, for your kind introduction, and welcome everyone for joining the session today. And thank you everyone for being here tonight. So with the current market volatility, as Shane has mentioned, I believe everyone is in one way or another is looking for some relative stable choices in terms of your capital allocation, right? Especially with the tariff in place, which could change in days like roti canai, you will never know what's on the back when it's flipped. It is much harder to predict earnings on some of the export, import-based companies right now, right? As compared to previous, maybe a year back, especially on the technological sector. But today we're not going to talk about the technology sector. We're going to focus on something internal, which is on in Malaysia itself, which is the consumer sector, right? So this is one of the interesting sector that I think it is worthwhile for investors to look at the moment. So if you look at the consumer sector as a whole over on Bursa Malaysia, there are approximately 222 companies that are listed over on Bursa Malaysia, but not all of them are quote unquote directly consumer related. We talk about that later on, right? So without further ado, we'll dive into the main topic today, which is the consumer sector growth in Malaysia, analyzing trends ahead and some investment potential, right? Okay, just now Shane has already mentioned about the disclaimer, and I would like to once again reiterate, if you really need any form of investment advice or anything, sort of things like that, please see someone that has a professional certification or dealer rep, investment analyst, and so forth, right? So this session should not be constituted as any buy, sell, or recommendation or whole recommendation, because we're going to touch on some of the companies named later on, right? Okay, so this is myself. Chen has already mentioned, so no need to repeat this. Okay, and I think before I dive into any of the single companies, we need to have a brief understanding, brief update of actually what is going on over on the consumer industry landscape that is over in Malaysia right now, right? I think that's very important for us to have a macro understanding, just like we have the perspective where, oh, the market is a bit volatile now, so I need to look for something more stable, maybe in banking, maybe in consumer sector. So I think it's quite important in that sense to have a macro view. Some of the statistics that I would like to share with everyone here. Firstly, obviously our Malaysia overall our economy grew by 5.1% back in 2024, which is quite an encouraging number as compared to 3.6% back in 2023. The total economical value back in 2024 is 1.93 trillion in terms of the total size, right? I think maybe the trillion is a bit hard to relate, but in terms of the growth of 5.1%, I think you all can see in the news or maybe from a publication from Bank Negara or maybe from the government or news. You can see this number on a lot of places, right? And most importantly, which is closely related to what we are going to talk about today, the our gross national income per capita actually increased by 3.6% to 55,894 ringgit, right? That's our gross national income level per capita. So what does that actually mean? Sorry. Okay, we talk about the private final consumption later on. So what does that mean? Actually, compared to 2023, 2024 income per capita has actually increased by 3.6%, which is quite important because it would directly correlated to spending power later on. And also, when we are buying into the stocks or investing into companies back in Malaysia, it's very important to look at the country's growth as a whole, right? Of course, we also have some issues here, lingering issue that like Shane mentioned just now. One of the thing is the boycotting issue, which is something that is out of control, right? This is out of what we can expect, and there's also something that we need to look into, which is the income gap between the wealth and also between the poverty line, and also there's a discussion on potential reclassification of the M40 category. All these things are directly correlated back into the consumer industry, right? And specifically in Q4 2024, the private final consumption, which like me and you, we spend over in the market, the private final consumption has actually grown by 4.9%. And this is largely supported by some of the things like transport, restaurant, hotels, and also non-alcoholic beverages. This is statistics from DOSM, right? And these are the few sectors that are supported. So do note that we mentioned about transportation, which is a consumer staple. One of the company that actually just got listed is in the transportation industry, right? It's also a sort of consumer industry. Restaurants, we do not see a lot of restaurant company direct. I mean, a single brand that just went listing is Coffee, obviously Oriental Coffee. But for other pure play brands, restaurant brands that going for listing is actually quite rare currently, right? The last one that we have has already gone privatization, which is Old Town, right? And if you think about it, the other brand is Sushi King, which is under Tex Chemical, right? Texchem. So these are the names that not a lot of people know about. Hotels, right? Hotels, we have the option and also we have the luxury to choose between REITs and also some of the direct operators of hotels, right? We talk about the names later on, right? This is just a brief overview. And we'll talk about whether the consumer industry would it get impacted by global uncertainty, right? Our topic today is to look for a safe haven for capital allocation. But is it true that consumer industry, since we are only looking internally, we are not looking outwards, does it really mean that it will not be impacted by global uncertainty completely? Now we discuss about this shortly, right? So back into the first point, right? Something I would like to add on is that actually over in budget 2025, our government has the aspiration to hit a GDP growth. Again, when we're looking internally, we need to look at the country's growth. We have the aspiration to hit a 4.5% to 5.5% in terms of GDP growth, which is quite high if you compare to our surrounding neighbors, right? And support how do they derive this number, right? It was supported by some of the initiatives that are more rakyat friendly, which in the later slide I will discuss about that later on. And with the current economical outlook, right? Someone has already commented. Do you guys really think that this year, right, with all these tariff in place, all these market turbulence, whatnot, can we really hit the 4.5% to 5.5% GDP growth? So feel free to comment below, right? Someone already commented. We will also discuss about this factor later on. And next, we'll talk about whether the consumer industry as a whole will it get impacted by global uncertainty. In a short answer, yes, it will get impacted. It regardless your internal you're spending internally, right? It's just I give you another example. Is a lot of people in US they are thinking that oh the tariff actually they're charging onto consumer, right? If I buy something externally. So I just manufacture in-house or in US itself, then I wouldn't get a tariff, but it's not so simple, right? Uh so very simple. If I look at one of the manufacturers in Malaysia, right, when they buy raw material, not all raw material are available over in Malaysia. You still have to look outwards to buy some of the raw material. Let's say garment or some of the food products. You still have to look outwards to buy all these raw materials. When you buy all these raw materials, there's a global uncertainty. What will happen? Supply chain disruption, it might happen. It would impact the pricing and also logistics costs that would get impacted. So it would inflate the pricing or the cost of manufacturing something. And also now we have something called over I would call it over capacity dumping. So what does that mean? If you look, if you are running business or if you look at the current situation over in China, China actually have an issue of overcapacity. Same goes for Vietnam. Vietnam is not so severe, but China, obviously they have over capacity, right? And for our local consumer industry, as we mentioned just now, actually most of it, yes, our demand is internally. It's actually from local. So let's discuss about one of the case study, which is Padini, right? Padini is one of the, I think it's a brand name that everyone knows. Majority of their revenue is actually coming from the local market. They have some foreign exposure, but it's not as huge as locally. Some of the products that they're sourcing from, think of this product they're sourcing from. According to one of the previous AGM I've attended for this company, I think their product are largely sourced from China, which again, not very surprised, right? It's a mega-sized garment manufacturing country. Vietnam is also one of the mega-sized manufacturing country. Even another listed company, Magnitech, they have manufacturing facility over in Malaysia as well as Vietnam. And also India market is also one of the key supplying. Of course, I do not have a crystal ball to see what is going next. But if you think deeper into the current scenario, right? China and Vietnam manufacturer, they are imposed with high tariff. Malaysia, we have a breeder for now. When they are being imposed high tariff to export over to US, what do you think they will do? Actually, they have only two options to do. Number one, they might divert their capacity over to other countries. This is where we mentioned the overcapacity dumping. Uh, you just look at this is where when they throw over the overcapacity, this is where the competition will rise. Okay, we talk about competition and also in terms of supply competition first. When they have so much extra capacity, they will look to dump the capacity, just like steel. You see anti-dumping policy. It's same actually same for the consumer industry and also the products. where these players they will look to push the capacity or the products that they manufactured over to other countries, except for US, which one of the countries that you can see they are focusing on probably is in Malaysia, right? We have Taobao, we have Temu to compete against the existing player over in the market. Think of garment in terms of garment spending. Nowadays, you can just buy a new shirt. It's maybe not on Taobao or maybe not on Temu. You can still buy on Lazada, you can still buy on Shopee, right? So there are these additional competition coming out when they have the over capacity situation. But on the other hand, interestingly, when Pardini go and negotiate for pricing, the cost is there is an opportunity for the cost to be cheaper because it's more expensive for them to export, or I mean the demand for them to export over to US will be lower, significantly lower if the tariff were to in place. Just now I just saw a news that US is also imposing an additional 245% tariff onto China. At this point, this is no longer something, I mean, economically viable. Is something more of a number. It's just a number already. So it is no longer economically viable. I do not know how long this will last, but definitely there's a obvious trade diversion, right? In that sense. So what will happen? Just to recap, two things will happen. Number one, local player like Pardini, we might or might not receive more competition coming into Malaysia in terms of supply. But on the other hand, because they do not own manufacturing lines, so they are spare from the overcapacity issue in terms of manufacturing, are not in terms of brand to brand competition. They might able to negotiate for a cheaper purchase of the raw material or their products over from China and over from Vietnam. So it's very important for us to continuously monitoring the upcoming market trend ahead, which is in May. I think in May, a lot of companies they will publish their quarter report, especially for some of the consumer industry, right? You can look into their quarter report, what do they say? And in June, I think is the time for sorry, this month is the AGM for some of the companies. I think sorry, this month and also June there will be AGM for some of the companies, right? So if it's in this period, we need to go and check it out actually what is the impact over of this tariff over to the consumer industry, right? It's very important. But as we do not have a direct access now, so we need to figure out what could potentially happen. And this is one of the two things that could potentially happen and may have already happened. So apart from garment, which includes Bonia, Cheetah, actually Aeon is a mix, quite mix, is a very retail kind of brand. Calorino is also another company just transfer from Ace Market, is also on the, I would say, lifestyle company. And all these companies and also electronic items. One of the key imports of Malaysia over from China is including the electronic items. So you need to figure out whether companies like Sengheng, I know the share price has been quite low already, but if you're interested in the company or maybe you have vested interest, right, you should also consider this factor. Is the two things that I've mentioned just now. Okay. Okay, this is another pointer that I will talk about, the overall retail growth. But before I jump into the overall retail growth, I would like to talk about another industry that I have in mind, which is on the automotive industry. Because you mentioned about China just now, I think it's also quite important that we touch on the automotive industry, which is also consumer in a sense, right? Now you notice that Tesla, their sales recently are quite impacted over the globe, especially with the trade war currently in place. You would expect Tesla would have difficulties to sell their vehicle over in China, which is one of their key market. But prior to the tariff, which is the Liberation Day on April 2nd, the global sales of the EV, especially full EV and also plug-in hybrid EV models, they actually see a 29% growth year on year back in March 2025. And the growth is mainly led by China and Europe manufacturers, right? Now things might change very fast. March, we see 29% year-on-year growth. Now we might see a significant slowdown in Europe because of the tariff. But locally, speaking back locally in terms of consumer industry, you already can see that there is a change landscape over or in our automotive industry. If you look at our TIV, total industrial volume, which is the total car sales in a year, MAA, which is the Malaysia Automotive Association, they would from time to time publish monthly data, quarterly data, and also yearly data in terms of the car sales, right? And if you look at the car sales breakdown previously, usually it was dominated by two brands. Uh, Obviously it's Proton, then it will be followed by some of the other brands like Toyota, Honda, then it will be the more luxury brand afterwards. But recently, I think you can see that China brands are taking a more higher market share more and more, right? Then when we talk about automotive industry over in Malaysia in terms of the landscape, right? I think it's going to be quite challenged for some of the players like Bajaj Auto, B Auto, which they have Mazda, Kia, Peugeot, and UMW, they have Toyota, Perodua, DRB Highcom, it's Proton. Then CCB, not a lot of people might notice this stock, Cycle and Carriage, but they are more focused on Mercedes-Benz. But one of the stock that actually may or may not be benefited from this because they have the exposure over to BYD and also Chery is Sime Darby Motors, which is under Sime Darby. So although this year, if we look at the TIV, it's very likely that the TIV this year would shrink as forecasted by MAA. Last year, we have 800 something over thousand in terms of total TIV, which means new car sales is around 800 something thousand. But there's a forecast of it dropping to 780,000 over this year. And actually, this already hinted that this year the automotive industry will slow down. And you imagine is with slowing down in terms of car sales and also higher market share over in China, China car brands. So what would happen to some of the players in the industry? There are few choices that we can choose. Number one, we can still look into a potential you play, right? We will see what the players are going to do amidst this China taking more market share. Or number two, we can see whether there's an opportunity to participate in some of the companies that have the exposure into the China brands. But regardless, I think one of the topics that are being discussed right now is that we cannot take in fully imported EV over into the country because there's a huge competition. Now, I think we are in a discussion over to have some of their manufacturing line or partial of some of their parts must be manufactured over in Malaysia. I think this is in discussion. So this would impact onto the more back end in terms of the value chain. It's not really consumer industry directly, right? You have Pekka, then you also have some of the other companies like the newly listed MSB is on the aftermarket. So it would have an impact onto these companies if the value chain were to move over into Malaysia. But speaking of the consumer industry alone on automotive, I would say that it is important to take a look over into the China exposure car brands. Okay. So we come back and discuss about these few companies later on if you guys are interested. Okay. And the 4% growth over here is actually forecasted by the Retail Group of Malaysia. They forecasted a potential growth of 4% ahead, specifically for the consumer sector. And now I don't know 4%, 4% it means the sector as a whole. I believe 4% is not enough in terms of growth for a lot of investors, right? 4%, depending on what kind of spending behavior that you have, it might not even justify the inflation rate. But in terms of company by company level, which we'll discuss later on, I think it's still quite positive in terms of the overall number. And we mentioned about some of the challenges and also opportunities for the consumer sector in Malaysia just now, given the current tariff and all these things. And I think some of the things that we should look into is that current local stability is more stable right now. it could help to boost the local consumption over in 2025. I think the first one is something that is everyone is happy about, which is the increase of minimum wages by 13% to 1,700 since February 2025. And also the 4% to 8% increase in terms of the, 4% to 8% increase in terms of the civil servant salary, and also the increased tourism arrival over in Malaysia in 2025 with specific visa given to the China, right? These are the factors that could potentially boost our local consumption and also local demand. And but the risk, of course, persists given the situation right now, which if what we mentioned earlier, the supply chain disruption, if you are investor back in the COVID times, so you understand that if there's a significant trade war and you have a tariff, you have a sanction, so I have a difficulty to manufacture the product, price of things would generally increase. But we have not seen that right now at this moment. I think a lot of business owner they are still observing this trend at the moment. But luckily, I think one of the factors that has buoyant the current outlook is that our OPR is still maintaining at a very stable 3%. I think that helps a lot in terms of stabilizing the borrowing cost, whether from business perspective or whether from the consumer industry, right? Because a lot of people, we have the tendency to use credit spending, especially with the new buy now pay later. So it's very important for our OPR to maintain low. Okay. Okay, now this is a chart that we mentioned just now, tourism level. If you look over here, actually our country has been recovering. We are trying to recover to back to the COVID era. As you can see over here, during the COVID era, the tourism activity is abysmal. In fact, if you look at the 10-month 2024, actually we are very close to recover back to 2019 level, which is 1 year prior to the COVID-19, which is on the right side. As you can see, 10-month 2019 against 10-month 2024. Actually, it's quite what we call recovering. So we talk about tourism. There are some of the industry that or companies specifically that could be benefited, right? Capital A. Someone in the chat room actually mentioned that low fuel price. Actually, with more tourism activity over in Malaysia and lower fuel price, actually this is something that is beneficial for them. And when we talk about Capital A, they also have a new division, which is the repair of the aircraft, which is performing really, really well currently, if you look at that division specifically, right? And so other companies that we must mention when we talk about consumer is Genting Malaysia. Previously see a very stiff drop in terms of share price. Of course, Genting, the holding company, also follow suit. And BJ Land, somewhat exposure to the hotel industry. Magma, which is on the hospitality sector. Impiana, previously they're known as Impiana. I'm sure you guys know if you go to KL, you saw Wolo Hotel, or you see if you go to KL City, Impiana, KLCC, those are owned or co-owned by Magma. They rebranded themselves. Okay. But I think they're divesting to move into property development as well. Okay. But our topic today is consumer. But over the short term, I think REITs are somewhat connected to consumer topic because I would say a major chunk of the REITs over in Malaysia is actually correlated to the consumer industry, which is retail REIT and also hospitality REIT or maybe mixed REIT. They have a mix of hospitality, educational, and also they have the retail. Sunway REIT is one of the example, right? And for the tourism activity to recover, which is expected to continue recover going ahead, some of the sectors that we mentioned just now, maybe on the gaming, hospitality, it would be benefited over in this year, assuming the other factors like spending power does not change. But for retail REITs, right, not a lot of people talk about this part, which is for shopping mall specifically. Actually, the competitive landscape might be higher. Why? there is I don't know if you guys notice, if you're staying over in Klang Valley, you can always see new malls are being built, new malls is coming up. For example, if you are traveling back, I think from KLCC back to the main road, you can see that there's a new mall being opened, something 1895, which is a new retail mall. I forgot about the name. There is actually a oversupply of malls that is ongoing in Malaysia, specifically over in Klang Valley. Out of all the malls in Malaysia spread across Malaysia, actually 40% of them are in Klang Valley, according to a study. So you could see that if more malls were to open, it would divert the spending power away from some of the specific malls. Then some of the uh, retail REIT, which is shopping mall that we mentioned just now, their performance might get impacted. So you have to be careful on that part. Although when we talk about individual consumer retail business, they might be performing, but more as a whole, you have to be careful because there are more and more malls coming. If you are looking at the short term, maybe it's fine. But over in the mid and long term, you need to see whether the strategies of this mall to fight against the higher number of the shopping malls ongoing, right? And also, I would like to recap a bit on to the budget 2025. Some of you may already very familiar with the budget 2025, but some of you may not. So I think it's important also to touch a bit on this part. As I mentioned just now, the budget 2025 actually outlines a 4.5% to 5.5% growth in 2025. Some of you agreed, some of you do not. But this number, bear in mind, is before the new tariff policy being made in place. Now, we have seen the China president, they have come over to Malaysia and they have signed 31 memorandum of understanding, which is MOU that we always see. There is not a lot of information about this MOU as said when I checked on this MOU just now, not a lot of information. We are still waiting for more information here. So whether would this impact the GDP target growth this year, we will know very soon as we need to publish the Q1 numbers very soon, right? And some of the key excluding all the external factors, right? Looking internally again from budget 2025 itself. Budget 2025, they actually have some quite rakyat-based initiative, including the Sumangan Tunai Rama. They have adjusted it to 13 billion. And senior citizen, they're increasing a monthly aid up to 600, which is 20% increase from 500 previously. All these are factors that would support the consumer industry because people need money to spend, in short. And there's also another initiative, if I remember correctly, which is the support over to children from low-income families is up to 1,000 per low-income family. Targeted fuel subsidy, we do not have any concrete news yet. And I think most importantly, on a broader basis, in 2025, a lot of tax relief enhancement is coming on. And also, first-time home buyer, there are also some tax initiative to support them. So all these things, you might see that it's not directly related. It's not pumping money also, but in a way, it's actually increasing the spending power of every individual, right? As you can see over here on the second pointer, basic food items is still the same, right? Is exempted from the 8% SST, but this is only on the basis of your cooking yourself. Then probably you would not be impacted so much. But if you're eating out, I'm not sure you guys notice the pricing actually has been increasing quietly, bit by bit. Okay, but if you're cooking yourself, things like sugar, salt, flour, eggs, poultry, these are some of the things that are control items. So we do not see a very huge inflation in terms of the basic food items. Okay, but if you are a heavy coffee consumption guy or cocoa, then you might see some not significant in terms of consumer, you might see some price hike recently because both cocoa and also coffee powder, this has increased price very significantly recently. Nestle in 2024, because of the cocoa issue, they already adjusted pricing on some of their products, including our staple Milo. And in terms of coffee powder, we do not have a lot of listed um, coffee related companies, to be frank. Berjaya Food, Starbucks is one of them, but they have always been selling at a premium. So I think they do have a room to absorb the cost. And Zeus, I think Zeus is also aiming for listing, but they also announced an increase in pricing. Then what are the companies that are also involved in the coffee industry? Coffee, Oriental Coffee. I think they've been selling at a premium in terms of their products. If you look at their pricing as compared to their peers, right? As I mentioned just now, the Old Town, if you compare the pricing, obviously Kopi is selling at a premium, but of course they're positioning themselves at a different uh positioning, right? And based on what I understand previously, they also have some policy to adjust pricing on an annual basis. So these factors in terms of the cocoa, coffee that we mentioned just now, they would be impacted some of the manufacturers. They are also classified under the consumer sector I mentioned just now. 200 plus companies that are in consumer sector. Some of the fortified food manufacturers, they might see cost pressure. So they have two choices. Number one is to increase their selling price. Number two is to adjust the components of their products. Sometimes the premix that you drink, you do not know exactly how many percent is what inside. So it's quite common for them to adjust the component in the premix, right? Okay, minimum wages we have already covered actually. And public servant wages increased by 4 to 8% increase is also quite important in terms of the spending as well. Okay. So we mentioned quite a number of industry right now. And what are some of the, I would like to understand from you, what are some of the industries that you guys are interested or we have not really discussed yet? Maybe you can comment below or some of the stocks name that you are interested to learn more, right? We could not provide you any buy and sell call, obviously. So maybe we can, but we can give a very I mean, for educational, we can discuss some of the companies that you guys would like to understand more, right? While waiting for you guys to have some of the companies to come in, maybe we can talk about two companies that have very diverse interests. Why do I mention very diverse interests? Because some of you here, you might like it, or some of you may not like it because there are sin stocks, which is Heineken and also Carlsberg, right? Uh, Taking out the sin stock part, we talk about again when we talk about understanding a company, whether should I invest in a company as a safe investment, we need to understand from the roots, which is for the supply chain. Think of what the products of these two companies, what they would need. The key products, the key raw material that Heineken and Carlsberg needs would be malted barley and also hops. These are the two key raw material input that they have. And where do they buy all this material from? Which is from the Europe and also from the Western part, right? And if you look at the structure of a tariff and a current trade war, quote unquote trade war, it's quite obvious that there will be some inflation ongoing over in the US, Europe, Western part of countries. And actually in Southeast Asia, it's not safe to say that we are free from this as well. So we can expect some inflation. Whether this would impact the raw material prices, I think over in the short term or mid term, they would have a pricing adjustment. For example, for Heineken, they are not shy away from pricing adjustment. From 2021, if I remember correctly, they have already adjusted their pricing for three times. I don't know for heavy drinkers here, maybe you know more clearly. Carlsberg, they have only adjusted for one time in terms of pricing to maintain their certain level of margin. So to be fair, with all this potential inflation in place, I am really not surprised if Carlsberg will be increasing their pricing going ahead. And some of you might also seen a news today, which is quite fresh. One of the company that is going for listing on IPO on main market is Hoksun Capital. So this company is specializing in selling eggs. when we talk about eggs, some of you on social media, you already seen something very interesting. Uh, Over in the US, they are having a lot of fun making fun of the pricing of the eggs. So, uh, in 1 dozen of egg, which is 12 eggs, for grade A eggs in Malaysia, by perspective, is 45 cent. We kept at 45 cent, if I remember correctly. In US, 12 eggs, grade A, same eggs, reach $6.23 for 12 eggs. So imagine the potential inflation over on the US side, right? But also it gives you a perspective in terms of the poultry industry. Because when we talk about the consumer industry, poultry, eggs is also very important. So is this an interesting industry to look at? Because during bad times, I think things we will still eat poultry, chicken, and eggs, right? Eggs and also chicken over in Malaysia, unlike the scenario I given you over in US. So I think the pricing of 6 ringgit 23 cent, $6.23 for a dozen of eggs has been inflated. And someone, maybe the retail operators, obviously they are doing something in term to capitalize on this. I don't know. But over in Malaysia, fortunately, eggs and also poultry, they have a capping in terms of pricing to control. Sometimes this might not be so good for poultry operators, but they have subsidies. But what you can look into if you are interested in this industry, which I think has been relatively stable unless otherwise there's a spike in terms of raw material costs. What are their raw material? Corn, soybean meal. So these are the key input to feed as the chicken feedstock, right? If the pricing of corn and soybean meal spike and they couldn't increase the price of their products, which are poultry and eggs, then it would impact their margin. But now, if you look at the price of corn and soybean, I believe has gone down for a bit. So if you want to look into the poultry industry, I think now is a quite an interesting timing to look at it. But again, one thing that has been an, I don't know whether I should call it an issue, but the general perception and also valuation over to this industry is always on the mid to high single digit PE. So yeah, you would have a hint over on that, right? I saw quite a few of you already commented. Okay, we have Superlon. Superlon, I'm not sure whether they are directly consumer related, rubber hose company. 99 Smart, yes, quite unfortunate that they did not drop a lot. I don't know whether fortunate or not fortunate. Steel Company is not consumer. I don't know whether we can discuss. BAT is another sin stock. BAT, we'll talk about that. It's quite interesting. And it's also very good example to discuss about the perspective of dividend versus capital gain. Farm Fresh, FFB, yes, we also talk about that. And FNN, yes, they invested over 100 million to venture into upstream. Yes, all these companies we will try to discuss later on, including the 9S and BAT, FFB, FNN. But sorry, for Superlon and Steel, maybe it's a bit out of the topic for today, but maybe for the next session. Okay. So on to the next slide. Right. At the very beginning of the sector, actually, we already mentioned about F&B. So I give you a bit more of statistics specifically on the F&B industry. So according to DOSM, again, there are 136,453 F&B outlet service establishment over in Malaysia. I'm not I'm not surprised by that number. In fact, I think is below what my perception is, right? Because in Malaysia, generally where you go, you always see whether you have mama, you will see a lot of food establishment, okay? And all this, they actually contributed up to 99 billion in terms of total gross output. So out of all the industry, why do I keep talking about the F&B industry first? Because this is something that we need. It doesn't matter what kind of ups and downs of the industry. F&B or food related is always needed and it's a consumer stapler. Maybe in the economical downturn, you will not choose to go Genting, you will not choose to go hotel, you will not choose to go shopping, which impacted the REIT. But typically, 3 meals per day is something that you cannot run away. Okay. Unfortunately, like I mentioned just now, we over in Malaysia, we do not have a lot of direct F&B operator that are listed because of the complication of this company going listing, based on my understanding. Oriental Copy, one of the newly listed and also quite strong, right? Berjaya Food, which apart from Starbucks that we know, I think they also have um, they have two other brands that I couldn't recall the name, but it's not only on Starbucks itself. TechScam, Sushi King, and if you are staying in Klang Valley, they have if you went to Mid Valley and in between Mid Valley and the gardens, there's a cafe on the left. Then that is also owned by TechScam, right? But TechScam is a very integrated company. They have a lot of different kind of businesses. Okay, and so I would say that the demand for F&B, regardless of what timing we are in, I think is quite resilient. And one of the research that I actually seen is that the industry is expected to grow from 2023 to 2027 is expected to grow by 7.95%, which is quite interesting. Just now we mentioned about retail industry as a whole is going to grow by 4%. Now, if you are zooming into F&B specifically, is growing to grow by close to 8%. So what does this mean? It means that Malaysians like to eat. No. But F&B industry generally is a fast growing industry. But one of the factors that I will highlight later on is also on the change of consumer behavior, right? Like Shane pointed out earlier on, which is the some unexpected incident happen, then it would actually impact the demand for one specific brand. Some of the incident that happened. So this is the change of consumer uh, behavior. And also it's also about a trend. So last time a lot of people we like what do we like? Bubble milk tea. Then we changed into Chagi, which is relatively healthier drink. Then going forward, what will be the trend? We do not know. But for F&B industry, the inherent risk is also the change of the trend when we talk about uh, single brand owner. But for multi-brand owner, maybe they are safer in that sense, especially when the brand has already established themselves quite strongly. Okay. Um, I don't know if I miss out any F&B company that are listed over in Malaysia. I know Uncle Don is currently in another listed company called Oasis House. And apart from that, I couldn't really recall what other listed F&B based listed companies. You could argue that maybe Siumat, which is under my news, and maybe Family Mart under Cure Resources, and also 7-Eleven, you can also have ready-to-eat products, and also Nanas Meat Mart have the ready-to-eat products. Of course, KK as well, but KK is not listed yet. So F&B industry is quite resilient, and according to forecasters, they are going to grow at a quite interesting pace. Okay, sorry. Okay, and it is indeed a staple industry, but if you are someone that is eating outside consistently, you'll notice that actually the price inflation is quite steep, right? Especially for the consumers, if you have touched on cocoa, coffee bean, these are the two things that are non-control. It will be more, I don't know whether it will be more and more expensive, but over in the short term, it's going to be expensive. And usually what do they do is to transfer the pricing over to consumer. Interestingly, for consumer over in Malaysia, we don't really mind to consume a 15 ringgit price tag latte. So I think for F&B operators, they think that consumer can still accept this kind of pricing so far, right? And apparel industry, we talk about Panini, we briefly mentioned Cheetah and Magni, the manufacturing company specifically. They diverse for a bit, but it's still a lot on Nike, right? Nike also recently got impacted because of the tariff issue. Not sure how Magni would get impacted because for value investors, actually, Magni is one of the well-known value stock for value investors, right? But back to Malaysia itself. actually we have a limited choices of apparel related stocks. But as I mentioned just now, like Magni, they are usually trading at a relatively attractive P and dividend yield. If you look into some of the companies, uh, of course, some of the companies they are on the back end, maybe textile companies like I think you guys never heard of it. I also just when I doing the research, I only just get to know these companies like Sinaran Advance, Prolexus, which changed their name now. These are the companies that are somewhat uh involved in the textile and also the garment industry. So we really have a quite limited choices in terms of apparel stocks, right? Um, I think yeah, this industry is expected to grow by 5.25% from 2025 to 2029, according to Statista and something that I saw on Media. Uh, this industry is quite interesting. Some may think it's consumer staple, some may think it's not, because to me, I think it's a modern consumer staple. You still need to wear clothes, no matter the uh industry, how's the economy going, right? Of course, consumer discretionary luxury brands they are going to perform in especially during post-COVID era, you see that's revenge spending or going on. But during market downturn or a weaker market as a whole, I think that the affordable pricing kind of brand like Padini, actually not so affordable, it's also close to 100 ringgit per shirt, some of the products. Okay, more normal pricing products like FOS, Padini, they might be benefited. Of course, you have the higher range Uniqlo, H&M, Zara. Cotton On is also on the lower end. So but all the later names that I mentioned is actually owned by foreign companies. So locally, if you are interested in apparel, there are not a lot of choices for you to choose from. Okay. So consumer staple, we talked about that already. Okay. Before we move into the case study and also the discussion of some of the stocks over here, someone also mentioned about Hexstar and also Guangchong, which is the something that we mentioned just now, the cocoa part, price hike. We're going to discuss a bit in terms of the risks and whether consumer sector and is it resilient. Okay. Um, Okay, as there are five factors, in fact, that we should look at into a company when we are interested to invest in the consumer sector. Number one is definitely on the consumer power. As I keep highlighting over in the session over and over again, when we are looking at consumer sector, it's very important to look into the macro perspective of that, which is the country's overview. So far, if you look at Malaysia, we have a decent GDP growth. We have an inflation that is below 2%, but that's the official number. I don't know. To me, I think it's quite dependent on what kind of things that you buy and also your spending behavior. If you are eating outside consistently, pretty sure 2% is not sufficient to justify your inflation. But if you are buying control price items and you are living on a very prudent means, then I think 2% is justifiable, right? And another factor, OPR maintaining. I think that is very important to I think these two factors are correlated in terms of the OPR, consumer power and also earnings power, right? OPR maintaining consuming power is supported by the lower OPR, right? Um, so we are somewhat lucky at the current outlook, right? And mention about consumer staple, I think as I mentioned just now, we'll go back to Nana Spinman and Mr. DIY later on. I just remember these two companies. Uh, in terms of earnings power, I have mentioned on the very beginning of the webinar that Malaysia, although the minimum wages hike is there, uh, government servant increase pricing in sorry, not pricing but increase of their pay salary by 4% to 8% is also somewhat to increase their earnings power. But the gap in between for the ultra ultra wealthy and also the poor, although not as severe as we see over in the US market, but I think that is still quite significant overall, right? Um, and also change of spending behavior, as what I mentioned just now. If you are investing into the consumer industry, some of the industry trend change doesn't matter. For example, like the egg, poultry, uh, flour, and also flour, and also the sugar. These are the industry that don't really matter so much in terms of spending behavior changes because they are uh staple in a sense. But we talk about brand names like F&B chains, then it will be very relevant to the spending behavior changes, right? Um, just now the earnings power part, I also miss out something. One of the things that would impact real spending power is also on the ability to purchase property. I don't know whether you guys feel to buy a property over in Malaysia is expensive. Actually, we are quite lucky if you were to compare with countries like Hong Kong and also Japan with elevated price. To own a property or to rent a property or in tier one cities over in China is extremely difficult or extremely costly to their overall. I mean, if you compare to the tier one city rental or purchase of a property as compared to the spending power, real spending power over to these countries, actually the gap is huge. Over in Malaysia, actually to live in KL, not really, really prime area, you still have a lot of initiative like Rumah Selangorku, like Rumah VIP, which has changed its name already. I don't really remember the name. Um, the housing issue is not really impacted our real spending power currently. Okay. Uh, and also we mentioned about some of the things that are more macro and is more uh something is not company specific. Now we need to talk about something company specific. Something that I would like to always reiterate with investor is that the transparency and also ease of access of information of a company is always important. So as a retail investor, it's not easy for us to access all this information of a public listed company apart from attending to AGM or EGM, right? Thankfully, now the Securities Commission, they've mandated all public listed company in Malaysia, they must conduct physical AGM so that we can ask question face to face. It is no longer online where I don't want to point names, but some of the companies, they would just ignore your question, so you cannot even ask questions over in the AGM. So now if you want to understand the company more, at least we can get to gather more information out of it and to understand more about the fundamentals and also most importantly their company strategies ahead for future growth and also for their expansion plan, right? If not, we are just having a very brief understanding. For example, I know 99 is operating as a consumer staple because whatever the um economy is like, you still need to buy the products that are supplied by 99 Mart. Okay, because they're being close to you. You of course you have other uh replacement that you can go to. You can go to Aeon, you can go to KK, but being a convenience store, I think the products that they are selling is true consumer staple, right? And we just now we didn't get to mention since we are talking about 99 Speed Mart now. 99 Speed Mart and also Mr. DIY, these two are very interesting. They are their products is from different countries. So for example, if you walk into a 99 Speed Mart, you might get tissue paper, you might get your I don't know your milk powder, which is potentially from Dutch Lady, right? Or you buy milk is potentially from FFB, which is Farm Fresh, or maybe from Dutch Lady. Or you buy some soft drinks, is potentially from FNN. And maybe you would like to buy Maggie. Maggie, maybe it's from Maggie is actually from Nestle, that one quite obvious. And if you were to buy tissue paper, NTPM, NTPM is another listed company. Not sure if you guys know. So all these companies, their products are considered consumer staple. And when they are at this scale, it's already different. Now, all these supplier, they are the one that need to negotiate with Nana Speedmart because they have the selling power to distribute their products. That is the same over to Mr. DIY. If you look at their sourcing of their products, which are largely over from China side, right? Obviously, the fall of renminbi against to ringgit is beneficial for them because they can source the product as a lower net ringgit kind of cost, okay, for Mr. DIY. But also it's also the ability for them to have the negotiation power to negotiate to the suppliers. So this is very important to look at the retail brands, whether they have a negotiation power. That means that they have sufficient selling power that, okay, so let's say if you want to put something to sell at Mr. DIY, you may need to pay them to list the product. This is actually very common over in pharmacies or maybe in 7-Eleven, maybe in Guardian. If you are operating in the retail side, then you know if you want them to put a new product up, you need to pay a listing fee. So they have the bargaining power to negotiate with you. And in terms of the why is this important is because if there's really a bad supply chain or inflation issue were to happen, at least this kind of company, they have a certain level of negotiation power on to their suppliers, right? So they are able to maintain a certain level of margin, unless otherwise it's really so bad that they couldn't even think to control it. Okay, so I think these are the few slides that I have. Maybe we can discuss a bit about some of the companies over here. Okay, let me see. Okay, I think quite a lot of you has actually mentioned to look at. I'll talk about FFB. Don't worry. BAT is a very interesting case study. Give me a minute whether I can look at the presentation slide. Okay, this is but okay, BAT, British American Tobacco. For those who do not know, this is a company. If you're new to investing, you really need to be careful about this, right? If you look at British American Tobacco, is a textbook value stock based on the valuation. PE 9.71, dividend yield 9.47. So it's a textbook dividend, value stock for you to look into. But if you were to look at their share price, right, has been declining. So I'm sure experienced investors here know what is happening, right? You have to look into a couple of things that this is also very important if you're looking into consumer sin stock. Number one, they are facing competition from BAT is selling the I forgot what the brands, I think Dunhill is one of them. Basically they are selling cigarettes. And cigarettes, if you look into the younger trend, normally they take vape. That's one of the trend, number one. Number two is that there are a lot of counterfeit cigarettes that are in the market that eat up their market share. Actually, vape is one of the factor, but not all. Counterfeit is the major issue for BAT so far, right? And if you look at their, okay, this is important for new investor. If you look at their historical performance, right, you can see that their earnings and also revenue is actually dropping, let alone that our country actually is planning to ban smoking for, I forget what's the age of born going ahead, right? Yeah, I mean that could be a good thing, could be not a good thing. I mean for investors, for BAT, definitely not a good thing. But we mentioned just now in our last slide, right? Sorry. The company strategies, what they are going to do with this kind of stress, this kind of pressure. Basically, that not a lot of things that they can do. Number one, counterfeiting is something that they could not block. Malaysia being Malaysia, you know, then you know, right? And number two, trend, consumer behavior, trend, spending behavior. Younger generation, they like vape. Why? Because it's not so I'm non-smoker lah, so that's not so smelly. And the as a the younger smoker, they like to have different kind of flavor, right? And when you go to vape, so there's a change in terms of spending behavior. So BAT, since someone has already mentioned, so you need to be very careful to when you look into the consumer industry. Yes, consumer industry, generally speaking, they are their PE and also their valuation can be quite attractive in terms of yield, right? They normally will pay out dividend. But BAT as an example, you could see that they got impacted quite badly. It's from the day I started investing and looking at them until now, their share price has been declining quite consistently. So I think I do not see a turning point or tipping point for BAT so far. I think it's quite troublesome for them also lah. So yeah, that's BAT, right? It's quite a good case study in terms of valuation and also the consumer spending behavior change and also the macro economy. And also Farm Fresh. Okay, Farm Fresh, FFB. Farm Fresh has just listed not too long ago, I think 2 years back. And it's basically I would say a brand that Malaysia is proud of because I'm not sure if you guys are coffee drinker. If you drink the coffee that is not advertisement now, but my own experience, if you drink the coffee, if they use farm fresh milk, normally it would taste a bit better. If you go to HWC, so you would feel the change in terms of the taste, right? FFB, we talk about the macro first, like what we have talked about just now. So we talk about their on a macro basis, would their products still in need? Yes, albeit their product are usually more on the more premium side, if you ask me, right, in terms of pricing. But I think people are still willing to spend, and they have different kind of strategy in terms of their strategies to have a smaller packing, right? Sometimes I do not want to spend so much in terms of drinking milk, but I would like to have a smaller packing. These are usually the F&B companies' strategies that they have, right? And recently, we can see that their financial performance has been increasing. If I remember correctly, when they're just listed, they are impacted by the raw material cost. Okay. Uh, and at the point of time, they also for their milk powder and also milk product, they have the freezing process. In fact, back then. Um, so at back then, their raw material pricing, I forget what is the issue, but they are impacted. But if you look at their recent 4 quarters performance, has been quite consistent. Every quarter, they are maintaining a very decent kind of profit margin. And they are expanding quite aggressively over in Malaysia. As someone pointed out here, uh, they have F&B outlet inside Scope. They bought it for 65 million, if I recall it correctly. And they are also launching new products continuously. Glow, Chocomalt, full cream milk powder, cream house. So basically, this is a very interesting stock where they are expanding into two parts. Number one, they are expanding into consumer. They have a lot of initiative to penetrate the consumer industry. Um, like one of the things they have a F&B outlet, but I remember correctly, it's not really performing so well for their retail outlets. It's in over in the mall, it's normally in kiosks, if I remember correctly. That part is not so well. Then secondly, they also have the strategy to penetrate into Horeca. Horeca means the hotel, restaurant, cafe, all these places, Horeca. And I think that part they are quite successful. They've penetrated into quite a number of all these cafe chain, restaurants, and whatnot, right? And if I cannot give you an exact figure, but based on their past few quarter performance, if they were to continue, I think they are ready to set for the growth. And in terms of consumer stability, milk is always something that people still consume. But relatively speaking, because their product is on the slight premium side, so people might opt for other option. I'm speaking from neutral standpoint, as someone that is earning maybe 3,000 per month, right? So let's say economy is not so good, I need to save more money. Probably I will not spend so much in terms of premium products. So I might opt for other options, maybe house brand of the convenience store, or maybe other cheaper alternative, right? So this is one of the potential risks over for Farm Fresh. And another thing is that Farm Fresh currently they have an issue of PE is not cheap, 30.9 times, and dividend yield is 0.6. If you were to compare with the closest peer that we can get, which is Dutch Lady, Dutch Lady is trading at 18.2. Dividend yield is 1.82%. So relatively speaking, obviously people like Farm Fresh more. It's very obvious from valuation, people like Farm Fresh more. But the expectation in terms of their earnings is also higher in that sense. But if you ask me, is this something out of fundamental, which is the sensitivity of the share price towards the actual earnings? Based on my observation, this is only based on my observation. I haven't done the back test to test it out. But regardless of the financial results that are published by Farm Fresh, I feel like the share price usually wouldn't move too much. Whether it's if it's super good, then yes, probably there's a spike in buying interest. But if not so good, normally it also wouldn't drop so much. It's always supported by the institutional investors and also, of course, a lot of fans of Farm Price. Sorry, Farm Price, but Farm Fresh. Farm Price is another consumer stock which is selling vegetables, right? Farm Fresh. So for Farm Fresh, there are two things that you need to consider. Yes, their product is there. They are very strong in terms of branding. They are expanding whether through M&A. They are not only buying companies in Malaysia like Inside they are also buying over in Australia previously. They have a very solid growth story, but considering the valuation, 30.9 times, if you use price earnings to growth to calculate, basically next year, you would expect Farm Fresh to deliver 30 something percent growth next year, which is not easy given their size. One year they are generating about 1 billion in terms of revenue. So imagine a 1 billion revenue size company, it needs to grow by 30%. It's not an easy task, right? And if they couldn't grow at that pace, there might be a re-rating. So from an investor perspective, so you have to really look at this. Okay. And let me see. Okay. SDS. Okay, SDS is also performing very well prior to the recent crash because their bakery, if you look at their financial performance, their bakery business has been doing super, super good and they are also expanding. So one of the key factors that cause SDS, if you do not know, if I remember correctly, they are originated from Johor side and they are specialized in bakery, right? Like the breads. It's not the bread that we see, not the white color bread like gardenia. It's not that one specifically, but other different flavor breads. So they are we call it bakery. They have their own store. If you are in Cyberjaya, probably you'll see one SDS. If you are Johor, definitely you'll know SDS. They have their retail operation. They also have their bakery business, which they make all these pastry bakery products. So after the COVID era, okay, we recent quarter drop lah, but we talk about what happened previously. After the COVID era, actually a lot of smaller players of the bakers, they have to close down their business because they couldn't sustain. Then SDS, as they start to kickstart in terms of their new um, capacity and also with more demand coming back up, they also deliver all these products to different retail chain. So like Nana Smith Mart, KK Mart is also their client. So with more demand coming in at that time, we can see that the company actually financial performance has been increasing. But this company has been performing quite well, but PE wise is still quite, I mean, to me, is still quite reasonable at 11 times, dividend yield 1.63. But they are also susceptible to raw material price changes because someone that sells their bakery, you cannot always increase price. For retail product, if you notice that normally once they increase the price, they will never put it back down. What will they will do when there's a drop in terms of raw material, they might or might not increase the portion or they give some discount, not discount, but they give you another free piece of bread or some promotion over there. So it's not easy to increase the pricing for them. Okay, so they are also susceptible to raw material prices increase. They might have to bear the raw material price increase for that kind of timing. I haven't really looked into their latest financial performance, but according to what they say, the recent drop in financial performance is due to their selling and distribution expenses increase as they increase the delivery fleet. And also remember, in the F&B industry, as long as it's something edible and it's not frozen, then it has a shelf life. When you have a shelf life, it's very important that some people will call this business as a logistics business, because it's very important to know which point of sale is able to sell all your products before your products gone bad. This is not like your 100 plus, it's not like your shampoo that you can put there for a year and nothing will happen, right? Probably not 100 plus, maybe shampoo and tissue paper. But for bread, maybe 3 days after, let's not talk about it's gone moldy. The taste already gone very different. So it's about logistics. The core business of SDS and also some other bread related business is actually lies in the capability of their logistic and how they manage the point of sale. That's very important. So far, I think SDS has done that very well in the past few quarters. So it's also important to monitor. I think next quarter uh they have some festive season in Q1, right? Next quarter is Q1. So we can observe whether they can continue deliver a good result, because they just increase their fleet size, whether they can absorb and normalize the cost of increased cost. We will need some time to observe that. Okay. And Luckin Coffee. Uh okay, this is interesting. Luckin Coffee, they have the aspiration of open up, I think 600, let me check. I think it's 600 outlet within 2 years, if I remember correctly. And Hexstar has secured the retail chain. But okay, from a very neutral standpoint, what do you guys think about the competitive landscape over in the coffee industry? For me, I am basically every day I would drink coffee, whether from where only. Okay, I'm a heavy coffee drinker. Um, there are a lot of brands that are competing over in Malaysia. Number one, you have Starbucks. Number two, you have the soon-to-be listed Zeus. Then you will be followed by HWC. HWC, I think they also have some plans. And then number four, you see more and more new brands that are coming in. There's a Korea brand, couldn't recall the name, but you have Zeus, very strong, and you have GG Coffee. Uh, you really can have, and there is a lot of boutique coffee shop over in Malaysia or boutique cafe over in Malaysia. So to me, the competitive landscape is quite high. I'm not saying that they could not perform, but in order to gain market share, you have to remember Luckin Coffee is a China-based brand. Yes, they has been very successful over in the US in terms of their expansion. But over in Malaysia is a different landscape. I give you an example. Jiangxiang Natie, which is the one of their very successful new flavor over in China, which they include some liquor into the coffee. Don't worry, in Malaysia they wouldn't do that, obviously. But in a culture of China side, they like to drink white liquor, right? So for Luckin, they have a brilliant idea to include some of the white liquor into the coffee. So it's very different in terms of culture, and it's very up to Hexstar, right? It's very up to Hexstar to have some new branding idea. For example, I have to say that the coconut latte is quite nice. It's very catered to uh our local palate, because it's quite sweet and the fragrance is there, right? But the key point is that in order to capture more market share, you need to spend a lot in advertising and also in discount. Malaysia, if you ask me, coffee drinker are quite price sensitive. If you look at HWC when they have a promotion, you can see long queue over there. And Zeus, when they do event, normally a lot of people are willing to queue just for the coffee. So Luckin in Malaysia, they need to do the same, which means they need to spend more money. But they have the aspiration to open up a lot of store. I think it's 200 stores in 2028, if I remember correctly, right? So they have the pressure to keep opening more stores, more stores. That means rental income, labor, capital expenditure for renovation. You have to have a standard renovation, although it could be managed, all these things could be managed, but advertising expenses is something that is unexpected because you will never know the ROI from it. It's not easy to measure the ROI, especially it's a new brand coming into Malaysia. So I'm also interested in Luckin over in Malaysia, so I will continue to monitor the company. At the moment, I don't think it's fair to talk about the valuation of the company because Luckin doesn't really contribute much on to the company, right? Uh, okay, let's see. Maybe answer some of the Q&A uh over here, right? We have looking into the chart. Okay, Shane, maybe we can pick two or three questions.
Sure. How about Bokong and Tome? What is your take in terms of these two companies from retail customer purchases when gold prices are going up now?
Okay, I think definitely if historically speaking, when the gold price went up, these two stock will usually perform. Historically speaking, especially with the gold price, I think it's 500 something now, is really, really crazy. But if you look at the valuation of these two company, whenever there's a gold price hike, their PE will drop. Um, after their financial results come out. If you notice that the market as a whole, normally they would not assign a very high PE to these two companies because they understand that the gold price is volatile in nature. Gold price could go up now. Sorry, I think it's quite 3,300 per ounce or something now, US dollar. And the price could also come down from that sense. And the operational of retail gold business for Pokong and Tome. Over the short term, I think they will deliver a fantastic result for the. I think Q1 will be fantastic. Q2 is likely to be also fantastic. But in terms of valuation, I think they need the market to realize that for you to capture the capital gain, right? If you look at the share price for Pokong, I don't think it's actually moved, even though the share gold price has been performing. Same goes for Tome. Of course, on the shorter term, after the crash has been rebounding, but over the longer term, it's always on the low side in terms of PE. Their PE currently they are both around 4 times PE for a very good earnings company. So I think unless something happened that could cause a significant re-rating, um, otherwise it's a bit hard lah. But fundamentally speaking, I think they will really perform good for the next 2 quarters. Yeah. I think you're muted, bro.
Sorry, I just noticed I'm on mute. All right, okay. Apologies. So what about Ajinomoto? Let's do it for as one last question.
Hey, Ajinomoto, they are okay. Ajinomoto is another stock that may or may not receive a lot of some people like it, some people don't like it. Okay, if you are looking Ajinomoto from PE perspective because they're super cheap, or the dividend perspective, so you have to take note that I believe they sold a parcel of land, and as a result, last quarter they give out 2 ringgit in terms of dividend, 2 ringgit and 12 cents in terms of dividend, which is very, very substantial, but it's a special dividend in terms of land sale. Okay, but in terms of their product and future prospect, right? I believe this is a company. Historically speaking, they are on a uh quite decent growth up until COVID-19. You can see that they are quite decent growth now. In 2025, I think they have rebounded back to 2019 level in terms of their profit after tax. So I believe this company is you need to do the calculation to remove the one-off land sale and normalize the PE to fit whatever valuation you are given to this company. But I think this company is a very solid company overall. It's also something that people consume nowadays. Last time, a lot of people argue that Ajinomoto products may or may not cause cancer. right? But I think overconsumption in anything would give you cancer. Overconsumption in sugar will give you cancer. Overconsumption in Ajinomoto would also, yeah, the same. And there are products for if you have the time, you can look into how they start to make all this MSG. I believe it is plant-based, so it's stemming something from plant. So if you're interested, you can study the whole process of generating the MSG. And fundamentally speaking, I think they would continue to recover.
All right, so that shall conclude our Q&A session with Max. Thank you so much, Max, for doing this session with us, for us to gain more insights into the consumer sector. All
Thank
right,
you so much, everyone, and thank you, Shane, for having me today.
all right, so for our next webinar, it is titled Dollar Cost Averaging Strategy untuk Pelabur Nilai. So it is happening tomorrow morning, 17 April 2025, 10 a.m. to 11:30. So if you want to learn how do we do dollar cost averaging from a value investing point of view, you may register for this session, which will be conducted in Bahasa. All right. So if you want to open a stock trading account, you may scan the QR code or click the link that I just given you. And thank you everybody for tuning in until the end of this webinar. Hope to see you in our subsequent webinar sessions. All right. Bye bye, everybody.